From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for March 7, 2017. In just a moment, we'll be taking a look at the AUDUSD, the Australian dollar, versus the US dollar for today's trade analysis. But first, I want to recap one of the trade suggestions made over the past few days. We're starting here on the USD JPY, the dollar yen. We were looking to sell underneath the resistance zone. It fell back on Friday from the resistance high at the green zone at the very top of the chart, pushed back underneath the yellow zone. So while we were underneath the yellow zone yesterday, looking for opportunities to go short on the breakout lower underneath that zone. One thing to point out, you go back out here to the daily and zoom it in a little bit here on the daily. We talked about this range yesterday in the trade room. We came off the green zone just like it did the last time over here on the left. It came off the green zone, made a new low all the way down at the bottom green zone. So looking for something very familiar to this to happen over here, where it came down, a break, and continues to go lower. Well, so far that hasn't happened. So far it came down and just has settled into the support at the yellow zone, back to the 4-hour time frame. And again, it really has done just about nothing since we got into the trade. It came down, opened and closed underneath the yellow zone, went back up, and just has gone stagnant inside of here. Of course, our risk is just above the yellow zone. If it breaks back above there, we don't want to stay in it very long because it's likely going to go back up to the green shaded area. So that's the risk in the scenario. Of course, our hope and expectation is that it continues to go back down, breaks back underneath 113.80, and heads back down to the orange shaded area. We need a good, well, really, we need a good sell-off of the US dollar, at least a surge against the dollar for the day today to give us back into break-even or better here underneath that yellow shaded area, back down towards the orange shaded area. If it doesn't do that, if we get a good dollar positive surge today, likely getting taken out of this trade. So really hasn't done much since we got into it. So still waiting. We have seen a couple of pips on the previous 4-hour candle. You can see the low here of this little blue candle pushed down to 72. So we've seen 4 or 5 pips on the trade, but nothing extraordinary, not enough to protect the trade at break even. If you anticipate that the dollar will surge today in a positive manner, it may be prudent to exit out, if you can, as close as possible to break even, just to get out of the trade. Now, let's go ahead and move on over to the AUDUSD. Similar situation, not exactly the same, similar situation. We had the blue trend line, the uptrend, and in recent weeks, couple of weeks, we have seen this market moving lower. Yesterday, we did have interest rate news out of Australia. No change in those interest rates. So we're still sitting here underneath this purple zone, just like we were yesterday. So with a big red candle from last week, big bearish move from last week, we've been sitting underneath that purple zone. You look back to the left-hand side, and you can see we've seen resistance at this purple shaded area before. That is between 75.85, 76.05, that purple shaded area. So we know that that has been factual, historical resistance. Now we're looking for it to regain that as resistance into that purple shaded area. And if it does, and the black box shows us this, if it does rehold resistance here at the purple shaded area, then we're looking for it to head back down to the yellow shaded area. And the 100 period moving average, by the way, sits just right around or just underneath that yellow shaded area into the 75.14 level. So that would be a good targeted area as close as possible down to 75.14 or that 100 period moving average into that yellow shaded area. So if we can get it to stay under the purple zone, we'll look for it to continue the bearish price action down to the yellow shaded area. The risk, of course, is pretty clear. We just don't want it to get back above that purple shaded area. All this, of course, would be a dollar positive move. Like I said, a dollar positive move sends us lower, and unfortunately would send the US yen higher if it is a dollar positive move. So hopefully we'll see one or the other balance out in our favor. In this case, let's go ahead and take it on down to the 4-hour time frame, and here we are again, taking a look at the price action over the past several hours. We saw the market clearly break under the purple zone, rally back into it. It had a rough time yesterday, came back down. We saw the market move back higher on that interest rate news, then back down. So this bearish candle, the bearish, maybe engulfing candle, if you want to call it that, gives us some clue that the sellers are still there. Sellers are still fighting back, just like they did yesterday, they did today. Sellers are fighting back on this pair. Forex Black Book did turn red this week, so that's something interesting to take note of as well. As long as it's within and underneath this purple shaded area, I'm looking for the market to go back down. The risk is a break back above it. If it does go down, we'll target back down into, again, the mid to low 7500s. A risk right now, stop loss is above today's high for the Australian dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.